Hello and welcome to another episode of Monday Markets. Let's take a multi-time frame view of BTC USD and kind of get a grasp of where we are. On the monthly, it looks good. The reason for that is the dip into the monthly support we spoke about for many weeks was very aggressively bought up, basically teleported straight from monthly support to monthly resistance, and no levels in between managed to provide any sort of reaction, resistance, or anything of that nature. So very straightforward rotation on the monthly. It's what you want to see, both monthly levels holding and also just very aggressively traded and bid up. So nothing negative on the monthly time frame for the time being. What could change that? One of two things. Either a failed breakout on the monthly, so closing above the range high and then in the next months closing back below it. I don't think that's terribly likely given the fake out rate on the monthly time frame is fairly low, but still something to bear in mind. The other thing that would make it bearish would be a loss of this monthly support at 19.4 to 20.4, which would look like a monthly close below that level and failing to find support there. At that point, you target the yearly open and probably new lows. But again, at the moment, that doesn't seem likely or available, but worth bearing in mind what the monthly time frame invalidation would look like, given it has been a particularly useful time frame. As far as the weekly goes, we are now pushing up against the range high, which you'll recall is at 24.3. We don't have a weekly close through it yet, but this reaction is very positive. So the market had this long wick dip that was very aggressively bought up over the weekend and on the sort of start of the week. In terms of the candle close itself, it ended up being ultimately quite constructive, regardless of whether what you want to use as kind of midpoint or the market structure high. In any case, 20k held on a weekly closing basis and was aggressively bid up. So that's good news. What would make this weekly time frame bearish would be one of two things. Again, very similarly, if you get, as you can see, there's a bunch of equal highs around this kind of 25k area. If you get a spike and then a very ugly reversal that closes back within the range, that would be the first sign of weakness and likely prolonged consolidation or continued consolidation. The second evidence or piece of evidence of weakness would be losing 20k on a weekly closing basis, suggesting that the low isn't in, or that the market at the very least is going to backfill some portion of this wick. But in the absence of either of those two things, so if it doesn't fail breakout and it doesn't lose support, the weekly time frame looks good. That's, again, a general comment because contextually we are pushed right up against resistance with CPI tomorrow. So it's hardly the most straightforward place for fresh positioning. But in terms of weekly structure, this is quite a positive resolution to what looked like a bit of a shitty week. On the daily time frame, given the rotation just played out so smoothly from monthly to monthly, unsurprisingly, a lot of these daily levels got smoked and the market just teleported from monthly support to monthly resistance, kind of leaving this entire range in the dust and not providing any useful consolidation or pullback levels at the moment. What I will note on the daily is that given how the monthlies and the weeklies look, if you're going to be targeting shallow pullback levels or looking for some sort of entry, you'll have to be on the daily or the 4-hour, 1-hour timeframes because the weekly and the monthly are unlikely to give it to you if this thing really starts to run. A couple of areas come to mind for where that might take place. So in terms of a very shallow pullback, I think the first area to keep an eye on is this pre-breakdown consolidation at 23k or thereabouts, 23, 23.5, whatever you want to call it. Fairly self-evident bit of price action. Market moved lower, consolidate lower, and now looks like we're going to have a daily close above it. So your nearest daily support is at 23.56 or thereabouts. So that's worth keeping an eye on. If the market decides to dip deeper than that and give a more visible daily time frame pullback, I think a reasonable area for that is the former range low at 21.6, which also overlaps with this cluster just above 22k. Again, we're dealing with sort of slightly wider areas here than usual because that's sort of a concession you have to make when the market's moving very aggressively and is either going to give you shallow or deeper dips and you can't sort of know or guarantee which one will happen. But those are the relevant levels to me. The reason I've kind of omitted this daily cluster for the time being is that it would probably just give back too much of the momentum to be useful. I think the only way we trade back towards this kind of 20k area is if the context for the coming weeks is not a breakout, but rather continued range-bound conditions, and we just pull back into the current weekly range low from the weekly range high. Essentially, the difficult determination we're going to have to make in the coming 1 to 3 weeks is whether this grind up against weekly resistance is a precursor to a breakout or just trading the extreme before we continue range-bound conditions. The issue with breakout trading is that you'll either look like a genius immediately or you're the idiot who bought the top. And so it doesn't feel very good being on the wrong side of that. But that's essentially where the market is. It's the third test of a very important range extremity, a bunch of macro catalyst fundamental stuff going on. And the larger context is that we're in a multi-month range, which is on the cusp of breaking out. So if that breaks out, that's a very serious signal, and it's one worth trying to catch because we know that the monthly targets are closer towards 30k. So there's a fair bit of displacement if this is essentially the bottoming consolidation that breaks up into those levels. In the absence of that, if we either just get rejection or some sort of spike, fake out, and then rejection, essentially we have to assume that this consolidation is going to last for longer and trade it accordingly. So it's a very tricky spot to trade. I guess that's also the overarching point I'm trying to make. The very straightforward rotation was from monthly support to monthly/weekly resistance. That rotation happened in like 2 days, and that's done. That was the meat of the move in terms of what's being telegraphed by technical levels, and everything else, you either catch the breakout and feel like a genius for holding on to your longs, or you end up breakout trading at the range high and end up eating shit and getting chopped up, and it's not particularly clear or helpful. I will mention that we have CPI coming up tomorrow. That's usually some sort of volatility catalyst. My sort of rebuttable presumption is that if there are dips around that sort of print, especially if it's something high and unpleasant for short-term correlations and risk assets, we know that the market tends to move quite aggressively in those circumstances, and I'm going to try to catch a piece of that if it happens to land at one of my technical levels, either for a swing trade to hold that into a breakout or just for a short-term rotation. So that's kind of something to bear in mind. I'm not too keen on positioning at the range high ahead of CPI. I don't think that's a great idea, but post CPI I think is almost certainly going to be worth trading. I'm just wondering if there's anything else that I want to mention. Not particularly. I think on the daily time frame, in terms of visible pullback levels, the nearest one to pay attention to is this cluster at 23k or thereabouts. This move is very aggressive, sort of huge expansion candles which have a chance of being trend forming. So I'm very cognizant that the market may not be charitable enough to offer deeper pullbacks. So I'm always going to have some sort of level that will allow me to punt if the pullback ends up being shallow. And I think the nearest decent daily level for that is this 23k cluster, to keep an eye on both for your higher time frame as well as your intraday trading, and if not, well then we'll just have to either go back to the daily cluster or reassess at that point. Generally speaking, with these kind of lockout high momentum moves, you don't want them to give back too much of the momentum if the market's still going to be strong. So for me, for these types of moves, it's either shallow pullbacks or much deeper pullbacks. I don't like intermediate pullbacks for these, and so the deeper pullbacks, we all know where they are. It's the same sort of monthly, weekly range lows. The shallow pullback is 23k-ish, and the intermediate pullback, while can be fine, is not my favorite when trying to catch a piece of moves that look like this. Yeah, I think that's all I've got to say, frankly. I'm just trying to rattle my brain to see if I've missed anything. Not particularly. It's a tricky spot, guys. The market's moved from the high time frame level to the to the other high time frame level. It's right at resistance, and if it breaks out, you'll feel like an idiot for not being long. If it breaks down, you feel like an idiot for buying resistance. It's not straightforward at all. So I think being reactive and still trading your system at good levels is the way to go for this type of thing. And I think I've mentioned this in passing, but again, if this does break out, even if it ends up being a deviation, trap, something ugly, there's a chance that it doesn't and that it's a real breakout towards the other monthly levels at 30, 35k, whatever it may be. So even if I'm not super comfortable trading the breakout, as long as it's not too crazy and gives me something on the daily and or the weekly, I'm going to give that a chance. And then if it's wrong, I'll just eat the loss and flip bias on the deviation. So yeah. That's essentially it for BTC USD. I know it's a bit disjointed, but essentially the market's played out the obvious move from support to resistance, and now it's at resistance, and we're here wrestling to determine whether the resistance is going to break or not before it's actually broken. So those types of discussions are always going to be less than straightforward. As far as ETH goes, similar view. So right the way back into the monthly range high, and the next monthly levels are further away in the 2000s, sort of 2300 is the next one. So if this is a real monthly breakout, there's plenty of space until the next monthly level. Unfortunately, it didn't have the same clear monthly support as BTC USD, but it did on the weekly time frame. You'll recall for the longest time we were talking about this weekly level on ETH, which ended up being very useful at the 1400s. You'll also recall we talked about sort of 1360 to 1380 as the top of this daily shelf to allow for a wick at that weekly level, and that's exactly where the market bottomed. So hopefully that was useful to some of you. Even looking at the daily closes at the weekly level, while my own execution hasn't been particularly good, as I argued on Twitter, or posited I suppose, the levels from Monday markets and Technical Roundup have been very good. So if that's been useful to you, leave a like on the video, let me know if you made some money or if you fucked up like I did. I'd love to hear from you. But it's a very much a similar story, where 1400 is like a very obvious weekly support level, and it's taken it to the next obvious range high resistance level, and that's essentially it. Yeah, so if it breaks out, we know there are higher time frame targets. Similar to BTC, I'm happy to give this a chance if it breaks out and use like a thrust candle stop or a breakout candle for invalidation. If it ends up as a sort of spike and close back inside the range deviation, that's a very clear reason to flip bias. And yeah, that's really the only thing that makes sense to me. If it breaks out, I'm going to treat it as a breakout. If it deviates, I'll take the loss and treat it as a deviation. Everything else is sort of far less clear. Even in terms of daily pullback levels, I'm not a huge fan of any of this kind of intermediate structure. Maybe if we go down to the 4 hour, we can find something a bit more charitable. This could be a bit of a reach, but if we're going to sort of extrapolate similar shallow pullback around CPI levels, I think essentially the support resistance flip and recent cluster at 1600 isn't the worst idea in the world for flash crash wick type of stuff. So that's I think a decently tradable area on the intraday time frame at least, but I still think it ultimately comes down to are we going to get a breakout at the range high? If yes, I'm going to treat it as one. If yes and it fails, well, take the loss, treat it as a deviation, and the charts will look rather unfriendly at that point. But that's really the only thing I've got to say for ETH. Again, overarching argument I'm making is that we have CPI tomorrow. That's usually a volatility catalyst. And the market's pushed up against high time frame resistance. I personally am not going to position ahead of CPI. Given those two factors, I'm going to let it play out and then see if the market offers me anything actionable. If not, then too bad. If it does, hopefully the levels and the ideas there are sufficiently straightforward. Nothing particularly interesting on the equities side. Equities are basically flat for the day and BTC is up 10%. So we have our own narratives and our own momentum at very important inflection points that are worth taking seriously. And so that's mostly where my focus is. The extent to which I care about macro is limited to how crypto traders are going to treat CPI tomorrow, if at all. And that's really where that starts and ends. So hopefully that was helpful. In terms of analysis, all of our levels hit very, very nicely, but across the board to BTC monthly support holding and being patient enough to wait for the monthly. That was nice. As far as ETH goes, the monthly resistance led to a rotation lower and then bottomed exactly at our weekly and sort of daily sub level at 1400 to 1380. All of that is great. Trading it was a bit of a pain in the ass for me personally, but it is what it is. I'll get better and get over it. Now it's a bit of a tricky point where if you have conviction, like Don, you're just holding for a breakout. If you don't, and if you're flat, then you're waiting for the market to present you with evidence and then react to that evidence accordingly. On this occasion, that dilemma comes down to, are we going to get a breakout? If we do, I'm going to treat it as one. If it's a deviation, I'll treat it as a deviation, but I'm not going to try to outsmart myself and treat it as a breakout before it breaks out or treat it as a deviation before it deviates. One step at a time, take it at face value and manage your risk. That's all from me. Hope that makes sense. If you want some more lucid thoughts, make sure you're signed up to the newsletter that'll come out tomorrow around CPI time, trletter.com. And thank you for your support on the channel. And I look forward to hearing your comments and some stories about how you traded this rotation. Hopefully you did better than I did. And yeah, thanks. Bye.